Yeah, I'm losing my edge.
Technology stocks, boom or bust, topic of conversation here today. Pete, it's been the topic of conversation for the last several months, the last several years. We're going to dip into the last several years of technology trade relative to its other stock sector brethren in a second. But I just want you, we're about, just a couple of seconds into this segment. Just tell me right now, boom or bust?
Bust.
Wow. And that is small stakes, everybody. Have a great night. We'll talk to you tomorrow. No, I would tend to agree with you. And I want to work towards putting together, a good amount of statistics over the next days and weeks, because I think that this is a story that isn't going to go away. We've tentatively, allegedly, according to some news sites, projected new president coming in the next couple of months here. We'll see how that goes. They're now going to hand count Georgia again, which I don't know how that's going to go. But we've got stuff like that changing around. We also have, the fact that this pandemic, which everybody knew was going to come to a close at some point, and I'm not anticipating that it's going to come to a close in the next couple of weeks or anything, but news of different companies getting closer to a vaccine, Pete, is also shifting around people's allocations to different stock sectors. As recent as yesterday, where we saw a huge down day in technology stocks relative to the rest of the market. And this is just before we dive deep into this, you're going to be seeing sticks in SM75 a lot during this segment, and those are stand-ins for sticks, the small technology index. That's going to be kind of your technology stock market there, and SM75 being a broad index, that's going to be your stand-in for energies, industrials, financials, and materials stocks. And that's going to be the conversation here around those two products. But yeah, Pete, a real rough day yesterday for technology stocks, but taking back all of this bearishness here today. So this is a story that definitely, it's not going to be like one day and technology is over with. We're going to expect to see a lot of days like this on either side of zero.
You know what? And you made a great point, Frankie. And the one thing I would say is, and the reason I said bust is our bias hasn't changed. And I think you made an interesting point is, well, there was an announcement about some certainty around a vaccine. See, first time I remembered the word.
There you go.
Around a vaccine. Really, that's not certainty, but that talk of, June of next year is hopefully a good point where that hasn't changed. I mean, maybe everyone feels a little bit more that the likelihood of that is taking place, but I think this realignment of, broader market against tech, I don't even want to attach the fact that it was this one announcement that has now caused that massive correction for the previous 2 days and a little bit of normalization of that correction. I think, you know what, I always say when the news guys don't know what to do, they like pull up a card, insert card. Oh, you can't even see it. That's so weird. I'm holding up a white card. Insert reason why. And I think this is a case where we felt that the extreme was incredibly interesting for a long period of time. It is now started to work. It doesn't mean that it's not going to continue to work in terms of the opportunity.
Yeah, I would say in the short term, you're going to see a lot of action like this, 2 percentage points in divergence on either side on a day-to-day basis. But I do want to speak to exactly what you're hitting on here, Pete, which is more of a medium to long-term trend. Mm-hmm. I mean, you go back, there are so many examples of exactly what you're touching on. And I think one of the freshest in people's minds is one that's still playing out that's more than 4 years old, which is Brexit. Okay, like that has moved around the British currency relative to all the other currencies in the world, euro, US dollar, yen, everything. It's been pushing that around, that Brexit, for more than 4 years now. And it's absolute madness. And it's something that I think that COVID, hopefully, because literal lives are at stake, that it's a little bit quicker process. But it is one of these things where you saw this move to start this week, where it's big down day in tech, big rally in the rest of the stock market. And there's going to be a lot of back and forth. Today, you're seeing this bounce back in tech and a little bit of stagnation in the rest of the stock market. But I more want to look at the longer term trends because, yes, you're absolutely right. Though it seems like we are closer than we were last week to a COVID vaccine, it's not the scenario where it's like everybody wants it to be like this. And this is the knee-jerk reaction where it's like, COVID vaccine, I can now go outside and do whatever I want. Tech stocks are back to where they were prior to March. No, that's not going to happen in the next 24 hours, the next week, probably not even the next couple of months here. But that affords us so much opportunity because you look at these long-term trends. And of course, a huge amount of this has been put in since March. I mean, you just saw here. I mean, since March, tech stocks were 20% lower in March. Now they're almost 40% higher. That is a huge section of this rally. But this is something that's been playing out for the last decade for technology running on top of industrials, materials, financials. And then you've got the poor energy companies here that are actually in the red here for the 2010s. And this is more the boom or bust conversation that I think you and I have honestly been on the wrong side of for the last couple months of trading here. But I think that we're seeing start to unravel a little bit given the change in presidency and the COVID vaccine news that is coming to market here. Like these things don't occur just into perpetuity, right? Like look at the price action here in the aughts, 2000 to 2010. It's the opposite side of the story. And if I stopped this, if I wanted to do a little curve fitting, I could have ended this chart here in mid 2008. And quite literally, if you take this part of the chart out, it looks exactly like technology over energy, only it's the opposite thing. Right. It's energy over technology. And so like, this is all to say that these runs don't just like the Patriots in Super Bowls. A lot of people are seeing this year. The Patriots have a losing record. And without Tom Brady and all these things, they don't just win every year because they are who they are. Technology doesn't just increase for the next 10 years because it's happened the last 10 years here. None of these runs continue into perpetuity. The question becomes, is this now the inflection point, Pete? Yeah. I think that given the last 3 or 4 years of trading especially, this is probably the best I've felt about this being the inflection point.
Absolutely. And I think, you know what, this kind of context is great. I don't think you could have engineered, and a lot of times, especially we see guys selling technical analysis services, they'll cherry pick a day and say, oh, look how the doji candle worked on that day. Yeah, what about the other 251 trading days we have in the year? But I think this is clear, and you mentioned we were early. Of course, the most interesting trading opportunities, nobody throws the dart perfectly at, sure. But the setup here is something that we've been waiting for, and the context around bias is really important. Now, our bias was early, but because we start to get paid on that, this is a great walkthrough in terms of strategically, where do I want my bias to be? Now, we talked a segment briefly about intraday bias. In other words, what I'm trading for the next 3 hours, and I'm going, that's my bias, in my opinion, for 3 hours. This is an important context around, when we talk about, I don't know the right word is normalization, because it's not normalization, but reversion a little bit. And markets, as you showed, and you can go back another chunk of 10 years and you'll see a different set of divergence and convergence or reversion. And that's where the opportunity lies. And I think this helps in terms of building out, as you said, this is a great discussion around mixing in. There is, looking at longer term context for me, and I think for you also, is an important part of decision making. It's not the only one. Otherwise, we would have been way too early to this one, and looking for a 20% correction to break even. That's the one thing we avoid. But now we have the opportunity to take advantage of extremes that we haven't seen in a long time that are starting to. There's this great propensity. Look at the amount I got paid in a single day waiting for some of these. Now the inclination is to manage it. And we did. You manage part of that position. It doesn't change your bias like that. If it does, that's the trap, because you're now removing toolboxes on a couple of days, and they were huge days. But I think looking at this context lets you feel comfortable that you don't have to recapture those highs to play that bias.
And we could, like you talked about, we got here a little bit early, and we could continue to be wrong. Like there isn't, I'm not saying get everybody bet on technology bust here. There's plenty of people out there who have made money over the last couple of years and the last couple of months betting boom on technology. What I do want to get people to is a simple way to trade this, which is one sticks future versus one SM75 future. And that technology piece is in the sticks. So if you're betting boom, then that's the piece you want to buy and sell the other one. If you're betting bust, then that's the piece that you want to sell there in sticks and buy SM75. That's the technology versus everybody else trade. It's both simple, Pete, in that one contract to one contract, but also you talk about that size piece, which is essential because, plenty of people could have been looking at, this run going from 2000 to 2008 here and then starting to give back and then giving back, giving back a whole lot more in the 2010s. And if you're early by using traditional futures, if you're early by a couple of days or a couple of weeks, and we've been early by a couple of months here, right, then Pete, you get taken out of that trade before it even can go in your favor. Right. And so not only is this a simple way to bet boom or bust on technology, this year alone, a bunch of movement between technology versus everybody else. And this chart here has only seen about $1,000 worth from low to high movement on a volatile year, right, using futures, whereas traditional futures to make this would have been tens of thousands of dollars from high to low in this move. So it's simple, it's smaller than those traditional futures, an easy way to bet boom or bust on tech stocks.